Equalization meeting. Today is January 30, 2024. It's 3:00 p.m. Please silence all cell phones. A copy of the Nebraska Open Meetings Act is located on the north wall of the county boardroom. We have present today Commissioners Kelly, Klug, Warren, Mixon, and Burmeister, along with our County Administrator Bonnie Moore and our County Clerk Deb Hotaling and our County Treasurer Jeff Mikesel and our County Assessor Dan Pittman. Please silence all cell phones and stand for the Pledge of Allegiance.
Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
We'll start with the consent equalization agenda. This has regular items of business. Would anyone like to see any items removed from the consent agenda?
Motion to approve.
Second.
Motion to approve by Commissioner Warren, second by Commissioner Klug. Any discussion? Please vote.
Ayes 5, nays none, motion carries.
Item number 5.1 is tax corrections 17378 to 17380. Dan Pittman, County Assessor.
Good afternoon. Do you have any questions on these?
Questions for Dan?
Good motion to approve.
Motion to approve by Commissioner Klug. Is there a second?
Second.
Second by Commissioner Mixon. Any discussion? Please vote.
Commissioner Mixon, did you?
Yep.
There you go. Okay.
I got it. Come on.
Ayes 5, nays none, motion carries.
All agenda items having been addressed as published, the Board of Equalization is adjourned. We'll reset for the Board of Commissioners.
Give me just 1 minute. Okay.
Welcome to the Sarpy County Board of Commissioners meeting. Today is January 30, 2024 at 3:03 p.m. We have present today Commissioners Warren, Mixon, Burmeister, Klug, and Kelly, along with our County Administrator Bonnie Moore and our County Clerk Deb Hotaling. We'll start with Commissioners, Administrators, comments and announcements, starting with Commissioner Mixon.
In this wonderful day and age of all of the technology we have, I just was going through my phone and I happened to come across a message from my mother. She is deceased, but I still have a message, and it's she always will tell me happy birthday from here on out. So I'm going to just say this to all of you. With that technology, save that information. It's priceless.
And on that same note, with this day of public records requests, my emails are deleted permanently immediately, as well as my texts. But if I had one from my mom, I'd keep it too, Gary.
Wow, who's going to top that? Commissioner Klug?
Not me. No comment.
Nothing? Bonnie?
No comment, thank you.
Okay. We will move on to the consent commissioners agenda. Would anyone like to see any items removed from the consent agenda?
Motion to approve.
Second.
Motion to approve by Commissioner Warren, second by Commissioner Klug. Any discussion? Please vote.
Ayes 5, nays none, motion carries.
Item 5.1 is Resolution 2024-025, June 30, 2023, Sarpy County Financial Audit Report. Bill Conley, CFO, and Frank Hayes, Brian Brockmeyer, and Austin Hankey from Hayes and Associates.
Good afternoon, Commissioners. This is the annual report on the annual audit to the Board of Commissioners, and so it's my pleasure today to report to you that we have completed the annual financial audit for the fiscal year ended 2023. As you know, we started on that really almost before the year ends, and usually in May or so. We completed the audit and it was issued on December 22nd, 2023, by our independent auditor, CPA firm, Hayes and Associates. Austin Henke, audit manager with Hayes and Associates, is here. And he will, he's right behind me now. He followed me up. He will be available for questions and for discussion after I spend a few minutes kind of walking you through the financials. For a couple of you, this will be repetitive. On January 8th at our audit committee meeting, and I'm pleased to report that we do have an audit committee at the county now for about a year, and it is making a difference. And so the audit committee had a chance for me to present and to discuss the financials and to also spend some time talking to Austin without any financial leadership in the room or on the call. So that's a best practice that I'm glad that we're doing. So before I get started, I want to give some thanks to some people. The audit here, I know you're going, we're so tired of hearing this, but the audit is a really quite an overwhelming activity that we do. And I'm old and I've been around finance for a long time, but the audit here at the county is a very challenging project. I'm really, really thankful for the team that I work with. Jenny Rock, who is amazing. She pretty much runs the show now, and I just show up and make mistakes and she corrects them. So Jenny, thank you. And Michaela Gansimer, who just does outstanding work in everything she touches, high quality, and I'm really fortunate to work with both of them. I also want to thank Tim Lenz. He's an outside CPA, a different firm, and Tim really helps us kind of finalize our audit work papers and make some journal entries that we have questions about, and he kind of makes the whole thing, once we think we're done, kind of everything work. And so we're really thankful for Tim Lenz and the work that he provides. And so I mentioned the audit committee. So there we go. We'll start. The audit report, which is not included as an agenda item, but the audit report is on file with the clerk's office and is online. It's online at sarpy.gov. It's 70 pages of riveting reading, and I don't mean to make light of it, but there's some really good information about the county there. I'm going to kind of walk through the different sections. Today I'm going to highlight, just as I've done in the past, just one of the financial reports, financial sections. So this shows the various sections of the 70 pages. The first 3 pages are on the CPA firm's letterhead. It's the independent auditor's report, and I'm pleased to report that we have an unmodified opinion. That's the objective. In the second paragraph, this letter states that the accompanying financial statements present fairly in all material respects the financial position of Sarpy County as of June 30th. So this is what we work 7 or 8 months out of the year to get. So for us, it's a big accomplishment and something we really need to do for the county's financial health and for our bond rating. The next section is the management's discussion and analysis, MD&A, and that is 11 pages or so of required, and some of it's required, some of it is supplemental that we put in there to try to tell the story of the financial numbers. It's good reading. I recommend it. I won't be spending time on it today. The next section is the government-wide financial statements. These are the 2 financial statements. One's, in essence, like a balance sheet, and one is like an income statement, if you think about it as a business, but they're called something a little bit different. I'm going to spend a little bit of time just walking through these numbers. So bear with me. I know there are some numbers, but these are the only 2 financials that we're going to kind of walk through. And these are county-wide. So these include all funds under the jurisdiction of the county. So the first financial is the statement of net position. Sometimes I just call it the balance sheet. So this shows assets, net position, and total liabilities. And so I'm just going to highlight a line and just say a couple things as we go through these quickly. Cash and investments, and I took the entire financial statement and boiled it down to what 10 or 11 lines. The audited financial report has 25 lines or so, so it's a little bit condensed. But cash and investments, investments at the end of 2023 were $125 million. It was down $55 million from the prior year. Don't worry, there's a reason. We spent down $26 million of our Connect SARPI funds, so we plan to do that. We spent down $10 million of our ARPA money, and we spent down about $20 million of our building bond on the new jail. So these are all things that we planned on. It's nothing to be terribly concerned about. This chart shows our cash and investments over the last 5 years, and you see it kind of went up when we got ARPA money and we got bond money that we're holding for construction projects and so on. Accounts receivable or receivables were $36 million, an increase of $1.3 million, really just due to taxes receivable. Capital assets. Capital assets are fixed assets. We had a total of $361 million. It's an increase of almost $54 million from last year. In 2023, the county added $63 million in capital expenditures, offset by just about $9 million of depreciation. And we had $1.2 million of disposals. And you might be going, what are disposals? Well, disposals come into play when, a key example would be when cities annex certain properties. And so part of our capital expenditures are roads. So if a city annexes them, we take them off of our books. Total assets for the county at the end of the year were $547.2 million, almost exactly what we had last year. You see the components were a little different, but almost exactly the same. On the liabilities side, payables were $12.3 million. It was a decrease of $6.5 million. This is lower due to amounts due at year end, primarily related to the correctional center project as it was nearing completion. A year ago, we had a lot of accounts payable for that project. Accrued liabilities were $25.8 million. This is an increase of $6 million. This is due to entries made on our actuarial pension liability. So don't ask me to explain the actuarial pension liabilities, but we do a full actuarial report, and then we have certain entries that we need to book for that. Bonds and notes payable decreased $8.3 million. It was a quiet year for bonds and notes payable for the county. There were no new issues, no early payoffs or anything, so it was simply the reduction was due to debt service that we made during the year. This chart shows our bonds and notes payable over the last 5 years. You can see kind of the growth in certainly 2022 when we issued $100 million, 60 for the highway and 40 for the new correctional center. And then again, it shows no new bond issues in fiscal 2023 and none thus far in 2024. Deferred revenue inflows were $28.9 million. It's a decrease of $14 million, primarily due to ARPA. So ARPA, when we got all that money and we got $36 million, we showed it as a liability, and we only reduce that when we spend it, and we record it as revenue as we spend it. So we spent about $10.3 million last year. So our bottom line, our net position increased $23 million. You'll see that in a little bit when we talk about the income statement side. So our net position over the last 5 years has grown to a total of $305 million, an increase of 8.2% over the last year.
Bill, can I
Yep.
interrupt you? Could you go back to the bonds slide, please? Because obviously we added quite a bit here recently for the jail and highway and road construction. So obviously there's a schedule of payoffs. Were those 20-year bonds?
I believe the building bonds were, I'll have to look it up. I think they were 18-year bonds, and I'm not sure of the highway. I think they were 20-year bonds.
Okay. And then obviously we had some other bond indebtedness prior to that, and they will be dropping off here as well.
Right, right.
Okay, so I'm just looking at the decrease that we had from 183 to 175, and obviously we're making payments and that's reducing. But then I'm not a person for debt, but there's healthy debt and then there's not healthy debt. And I know we're in the healthy range, but it's just a matter of being able, we're able to pay this off of what we're looking at going forward and everything. And I'm just curious, as we can talk about this later, I'd just like to see the bond indebtedness, how it goes down over the next 20 years.
Okay, yeah, we have a schedule for that. We can provide that for
Okay,
you.
thank you.
You know, and I guess it, there is, bond financing is something that, this county's done a really nice job. We've issued a lot of bonds. Notice when did we issue bonds? August of 21 and May of 2022, two really, really good times. Those two issues, I believe, were at 1.6, 1.7%.
Right, they saved us a ton of money.
Amazing financing. I wish I could go back and do more of that.
Right.
I think our overall, weighted average bond financing is 3.5% or something like that. I don't have a top of my head, but I'll look.
It's healthy.
It's very favorable.
Healthy debt for what
Compared to what we
need
would go do today. And so I think as interest rates maybe soften, we can look at funding additional projects, but right now is not probably the best time.
Okay, thank you.
All right, so we're on the income statement side. And I'll talk a little bit about some of the revenue components and some of the expense components. Operating grants for the county for the last year were $15.3 million. That's down $3.7 million from the prior year, primarily due to remember I mentioned ARPA. The amount of ARPA that we spent this past year was actually a little bit lower than what we had spent the prior year. So we recognized a little bit less ARPA revenue. Property taxes totaled about $80 million, up about $5.2 million from the prior year. Due to valuation increases, in spite of a 4% reduction in the levy for the county. Investment income. Is our treasurer still here? All right. Jeff and his team have produced some phenomenal results with the assistance of rising interest rates, but they've done a great job. Our investment income on county funds, the county share, was $3.9 million in fiscal 2023. It's an increase of $3.5 million. So it's up, almost ninefold over the prior year in terms of interest income. So I applaud the Sarpy County Treasurer's Office and your team for fully investing and really being aggressive in terms of what we're investing in. And I know that when I say aggressive, I don't mean you're investing in anything that isn't appropriate. It's just making sure that we're getting the best investments that we can. So great job on that. Total revenue for the county, $145 million, up slightly from the prior year, up about $6.1 million. So on the expense side, I've just broken out expenses by governmental or business type. Government expenses were $115 million, up $22 million from the prior year. A few things made this jump. $6.4 million was a contribution we made to the sewer agency, so that increased it. $5.9 million was from higher wages and staffing and operating costs for the new correctional center. We had added about 33 new FTE over there. $2.8 million in increased pension expense for public safety primarily, and $1.7 million higher debt service due to a full year. And it was planned, but we had a full year of debt service. Oh, and one other one, $1.3 million higher in supplies and maintenance costs in our roads department. So there are a couple different things that factored into there. It's not just anything that was really unplanned. It was just things that hit us this past year that we're planning on. On the business side, and business includes landfill, stadium, and sewer for the county, costs were $5 million, a decrease of $1.1 million from the prior year just due to lower costs. And those operations can vary, so it's not just a straight line. So revenues, less expenses of $24.8 million for the year. That's down $14.8 million from the prior year. A couple other items just to highlight real quick. Gain or loss on capital asset disposals. I mentioned what those are. We had some annexations, and so when we do have annexations, we record a loss on the disposal, and so they had $2.2 million this past year. It's normally higher, so it was $10.5 million the prior year. Prior period adjustment, I would just comment briefly on that. We had a prior period adjustment of about $500,000. This is due to two reasons. One is $319,000 was due to a restatement due to adopting GASB 96. That was the first time I said GASB, and I've been up here for 10 or 15 minutes. GASB makes the accounting pronouncements and the requirements that we have to follow for these financial statements. They have issued some additional statements over the last couple of years that have made our lives very, 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 very difficult, and they added a new GASB 96 for software-based IT arrangements. So we have to capitalize software, and we spent probably hundreds of hours on this whole GASB implementation, but we had to do a restatement of the prior year by $319,000. It's not terribly significant, but it gives me an opportunity to talk a little bit about GASB and the challenges. The other restatement was $197,000. The county has some departments and offices in the county have funds with organizations outside of the treasurer, and that's something the audit committee has talked a lot about. We're trying to make sure that we get as many of those funds within the treasurer as possible. We had $197,000 in the previous year that were not reflected on our financial statements. So we are now making sure that we get all the funds that are under Sarpy County control on our financial statements.
Are those funds being audited by someone?
I know some of the funds are at the Midlands Community Foundation, and I'm reasonably sure they have an audit. There's another organization where there are some funds, and I don't know if they have an audit. But I think we pulled most of the funds out of that other location.
Okay.
So the bottom line on our income statement is $23.1 million, I guess, net income. Change in net position versus $29.1 million in the prior year. So that's really it for the numbers. So you can relax, but thanks for playing along. I'm always happy to talk numbers, and I hate to dwell on them too much, but I think it's important that you understand that the board has some understanding of the basic financial picture of the county. There are other financial statements in the audit report. So we've just talked about the government-wide financial statements. There are the fund financial statements. And so we have government funds financial statements. We have proprietary funds financial statements. Those are our business activities. And then we have fiduciary funds, which are funds that we hold on behalf of someone else. So the treasurer holds funds for the cities, the school districts. Those go on the fiduciary fund, as well as any funds we might hold for, let's say, inmates and other things. So we have other financials in the booklet, or in the total 70 pages, but we won't spend any time talking about those. There are notes to the financial statements. These take a lot of time to do. They are informative. Don't just encourage you to read them, but straight through. But if you have questions on certain things like bonds, fixed assets, or other pension plan, things like that, there's some really good financial reports in here. We have 17 footnotes to the financial statements that are listed here. So I just call those to your attention. Toward the back, there are a variety of schedules and tables. Some are required supplemental information, and then there's other supplemental information. Again, I won't go through those, but there's a variety of actual to budget reports for the general fund and actual to budget for the roads and ARPA and tax certification, statements of accountability. Those are the reports that we get from the other offices and elected officials. So just call those to your attention. And then at the last part of the whole audit report is the last 7 pages or so are the independent auditor's report on internal control, compliance, and findings. And I can let Austin talk more about that here in a minute. But it's an opportunity for the auditor to tell you how our internal controls are, to identify that if there are any material weaknesses, any significant deficiencies or other items that you should be aware of as a board. And this table that I pull off the report kind of summarizes everything. So there were none. There were no material weaknesses identified, no significant deficiencies identified. And so no audit findings, and the auditor's opinion, as I mentioned earlier, was unmodified. So this is really the ultimate, the objective of our efforts to try to get a clean opinion and to make sure that we get the audit report issued. Our goal is to get it done within 6 months after year end, and we accomplished that as well again. So I was pleased, again, I would tell you from my standpoint, and I told this to the audit committee, very pleased with the work and working relationship we have with Hayes and Associates. This is their 4th or 5th year working with them, and they do a wonderful job. And so we'll be with them. I think we renewed, and we have at least 2 more years on our agreement right now. So that's kind of a summary of the audit report. I'm happy to always meet or answer any questions you have on numbers. I would open it up to any questions you have of me, but then I'll turn it over to Austin for him to say a few words.
The only question I have, and I think I know the answer, oftentimes communities or entities get in trouble with retirement funds. Our retirement funds are all handled by outside agencies, correct?
They are, yeah.
Okay, thank you.
I just have a comment, Bill, to you and your staff, being on the audit committee, the things that you're bringing forward and that your staff's bringing forward to tighten up the financials for the county are greatly appreciated. It's when it comes time for you to retire, which I hope is not anytime soon, this place is definitely will be in better shape than when you arrive, so we really appreciate it.
Thank you.
Bill, is the WIFIA and the NDE loans reflected in this data, or how's that work?
There's a footnote that describes the debt guarantees that we have for the sewer agency. The WIFIA, so the NDE was in a footnote last year, and it's still in a footnote this year.
Okay.
The WIFIA happened after June 30th,
Oh, okay.
so it's in the very last footnote, the subsequent event footnote, where we noted again that we have additional debt guarantees of $45 million for the WIFIA loan.
Thank you.
Any other questions for Bill? Thanks so much, Bill.
Thank you. Austin?
Hello, Commissioners. Bill went over pretty much everything that I wanted to talk about, and a few topics that we spoke about during the audit committee as well. The questions brought up about the debt, ideal time to issue those bonds, the benefit from the projects related to those funds. Though they were meant to increase the valuation of the county as well, so you're going to see a return greater than really the cost of the bonds through future levy or future taxes generated. And then really, if you're looking at the interest rate on those compared to inflation, you guys are saving money tenfold just through that process. Wanted to be available for any questions, but just to reiterate what Bill mentioned, we have 3 reports really that we issue that are at the beginning and then very end of the overall financial statements. clean opinions in all three areas, the financial statements as a whole, the internal controls, and then the final one is over really federal regulations. We do a compliance report or compliance audit over the major programs that we select to test as part of federal expenditures for the year.
Would you please state your name for the record?
Oh, sorry.
I didn't
Austin
want to
Hanneke,
interrupt
Hayes and
you.
Associates.
Thank you.
Thanks for the reminder. Any questions, commissioners?
I'm going to just ask a couple, and the first one is going to be, obviously, I believe we have this covered, but in your suggestion, or in your opinion of our cash reserves, are we in a very good position with cash reserves? Because obviously, there's always rainy days.
Certainly. Yeah, actually, this came up during the audit committee meeting as well. You know, that's a pretty significant change from the year before of the amount of cash that's left over is about $50 million change. And you see that go from the cash areas directly to your capital assets. So really, it's you're moving that value around. It's something that was expected to occur, right? That decrease, it was planned. And then, like I mentioned, that investment really in those assets is going to increase the value of the county moving forward. So you're going to see return on that or additional revenue generated rather than just an expenditure for any other purpose.
Then from your perspective, anything that you potentially see that the county could do better in the financial realm of this? I know you've given us an unmodified opinion, and
There's a couple of projects that we kind of talked about in the audit committee as future things that weren't a high-level concern, but just areas to look into. And I know that's kind of the process of the audit committee and the internal audit process that's going on an ongoing basis. There was nothing that I really felt warranted anything to be put into the report or really brought as something to highlight specifically, like for this meeting. Overall, as you guys have mentioned, the last few years with Bill at the helm at the fiscal level, things have continued to get better, and we love to see the implementation of an audit committee, all of the like internal efforts that are going towards making the county's operations and making that improvement year to year. It's been monumental.
okay. Yeah. And then last but not least, the one item that there are some funds outside of our control. And obviously, that's always a concern because even with good internal controls, things happen. And then if it's even outside of our control, do you have any comments on that?
Nothing in particular. We see that from time to time where an organization has funds that are outside of the treasurer's office that if you have changes in leadership, those things can either be forgotten or, just sometimes left out, not intentionally. But I think the efforts, again, by the county to make sure that everything's being included is really the most important part that we're looking at right now. And at a high level, I don't want to dismiss them at all. In relation to the county as a whole, they would be immaterial.
Right. I was going to probably say it's probably immaterial, but it's still material.
Yes.
And it's
We want to make sure that they're all being captured.
exactly. And I didn't get a chance to go through the whole report. Are those funds outside of are they noted in the report?
So in the financial statements themselves, they're brought back into the fold. That's part of that adjustment.
Okay.
I was going to mention as well, if you do go through those footnotes, I know Bill mentioned there's a schedule that he could probably give you year by year, but one of our footnotes related to the bonds, it has the next 5 years of what those payments would look like. And then after that, they're grouped into 5-year line items through the maturity of the bond. So that's in the report as well. If you're looking for that.
All right. Thank you very much. And thank you to Bill and Bill's staff, and well done.
Yeah, we appreciate you all as well. The fiscal team is monumental. Their effort really makes a difference for us. We work with a few other counties where that component is just not present, and it's just a much more substantial effort on our part to complete the audit. So I really do appreciate all of the work that they all put in. So thank you.
Thank you.
All right, anyone want to make a motion?
Motion to approve.
Second.
Motion to approve by Commissioner Klug, second by Commissioner Warren. Any discussion? Please vote.
Are you,
Jim, are you going to second?
I clicked on
Commissioner, there we go. Ayes 5, nays none, motion carries.
All agenda items having been addressed as published, the Board of Commissioners is adjourned.